Hi, this is Joe Rabel. Today we're going to talk about the S&P. I'm going to go into different time frame analysis on the S&P along with the momentum characteristics that are taking place. Also going to look a little bit at the oil market and actually kind of how we took advantage of at least the trade to the upside in oil. Let's go ahead and get started. We've got a slightly different setup. Please let me know if everything looks okay, if you can see everything clearly and you can hear me okay. Trying to add a little bit more to the setup. Anyway, we've got our 4 time frames up. I've got the S&P. Going back to the monthly chart to start. In fact, what I'm going to do is zoom in on the different time frames, and we've made a move off the low that's been substantial. We've been talking about this for quite a while now in several videos, and we've worked our way up into this sort of resistance zone. If you look at a weekly chart, we've made it back to the 618 as well. So the fact that we've gotten back up to the 618, we're not that far away from the 18-week moving average of 29.87 and the 3,000 mark, which is the 40-week moving average. So we've filled in a lot of this area, which is one of the things that was bothering me. Is if this thing would have, if the market would have rolled over from down here, we still had a lot of room, and I thought it might actually come down and then go up again, but it's just decided to keep pushing higher and fill in this area all in one swing. So we have not taken, since we reversed, we have not taken out the low of a weekly bar. So every single week has been a higher low since that point. So that's something you probably want to be on the lookout for. If we go to the daily chart, we're coming back up into this zone. I had this band of resistance up here, and we finally made it up into it. I wouldn't be surprised if they try and get it up towards 3,000. And part of the reason why I'm saying that is if you look at the MACD lines, both of them have crossed back above the 0 level. So we're in a position now where the momentum has switched a little bit. The price continues to respect the 18 MA on the daily chart, and the 18 is above the 40 now. So we have this opposing trend developing. If you go back and look at the weekly, right, you've got an 18 below the 40 now, and then you look at the daily, and the 18 is above. So we do have this opposing trend developing, which has the potential to reverse here and set up something a little bit more significant to the downside. The problem is, because of the way this is developed and the fact that the price is acting pretty well right now and the momentum characteristics are decent, it might take a little bit of time to really reverse this pattern. Now, if we go and look at the hourly chart, I think, one of the things that I've been looking at is that trend line, and I redrew the trend line already. This line was connected actually from the bottom through up to here. And one thing I did a little different, if you look at the way this developed, I'm actually using the higher bottom to determine, or to actually draw the trend line in, because it's connecting to 1 bottom, 2 bottoms, 3 bottoms. I mean, there's 4 bottoms that have, it's actually 5 touches on this trend line. Whereas if I drew it from the bottom and connected it up, it would be breaking it. The line just doesn't make sense. So I think you have to use common sense sometimes. And in this case, I would definitely be drawing the trend line from the higher low. So in that case, we're looking for another 1, 2, 3 to develop. We haven't seen it happen. We've gotten the 1 and we got the 2 last time, and then it never took out the lows that we had talked about. That was this bottom here, was never even threatened. So now, we've rallied up. I mean, we could be losing a little momentum, but we really want to see a strong move to the downside. This is what we've been discussing now. We've been waiting for this to kind of develop, and then make a lower high, and then preferably see, a trend change develop by taking out the low. Now, if we do that on an hourly chart and you have red DI confirming, meaning the red DI makes a move up, and then instead of coming right back down under 25, it makes a higher low. So I'm just going to draw this out just so you can see. I want to see red come up, and then I want to see it come down and hold and turn up like that. And if we do that, I'm going to have a lot more interest in looking at something to the short side, because if red TI can kick into the downside here and we get a change of trend on the hourly, I would be willing to accept the fact that the daily might not be ready completely, or you're still above the 40 on the daily. If we can get a full-fledged reversal on the hourly with momentum, I think it's worth a shot. Let's switch gears a little bit. I want to go and look at I'm going to switch over to a different program, TC2000 chart. And we've got the oil market here, and this is more of a perpetual futures contract is what I'm showing. We've got some resistance coming up, but notice, you made a pretty strong move to the downside. If I were going to draw like just a line down, I mean, look at the move that was made, and everyone was talking about this. And if we look at the USO, this has been kind of widely followed. If I look at a monthly chart, I mean, it looks just awful. It's in a downtrend, clearly in a downtrend. The weekly is clearly in a downtrend. And then the daily, I've actually got the trend line drawn. And we've got a little bit of room to rally. But the problem is with the USO now, they've changed the way they calculate this. It used to follow the futures contracts, perpetual futures contract a little bit more closely, but now it's not using the front end of the calculation. So I think they've kind of screwed this up a little bit. I would be very careful with this. I know they did a reverse split in this, but you got to be really careful about trying to mess with this. It's just been murdered. Yes, there might be a little bit of a trading move, but I think there's a better way to look at this. So if we look at I'm going to pull up so the low in this market was on 427, but actually the low for the oil was 421. So I just want to remember 421, and I want to show you what was taking place on 421 in XLE, which is the energy spider. So here's 421. I'm just going to highlight that so you can see it. There on the XLE, so I'm looking at the XLE on the same date as when we had this crater to the downside in the oil market. And notice this is the energy select, the spider for the energy sector. Notice how it didn't even break its 18 MA on that day. A lot of stocks weren't even down. I mean, they might have been down marginally, but there was no real reaction to the stocks with the energy, with the oil, the crude oil getting crushed. I thought that was a major tell in the market. And so, as we look at this, notice what's taking place. You have a really deep oversold level on the monthly chart. It's really gotten pretty far away from the 18-month line. And the same thing was the case on the weekly basis. You still had a lot of room in the XLE up to 44. And then on a daily chart, you had come in and you had your first pullback to the 18 MA that successfully looked like it was holding. And especially on about as bad a day as you could ever have in an oil market, the fact that this wouldn't break the 18-day, I think you had to have respect for it. If we go down to the hourly chart, you can see we had a break of this trend line. And then on the 21st, when the market was getting killed, this was actually testing this was doing the 2 in the 1, 2, 3 change in trend. Now, this was pretty sloppy. I mean, this is not the type of pattern where I go being real aggressive, and especially with what's going on in the oil market. I mean, you got to be somewhat careful. And I'm becoming a bigger and bigger fan of taking advantage of using options in this case, especially if you want to do a swing trade. So in this case, the swing trade would have taken place taking out the 3 to the upside. If we take out this high, my partner and I actually did calls in this, and we waited. We weren't early at all, but I'm doing this for a reason. I'm bringing this up for a very key reason. We bought the 40 calls in the XLE. And essentially waited for a little bit of confirmation. It broke out, it held and started to turn up. And we did these 40 calls that were maybe like 10 days out, and they cost us 10 cents. And over the course of the next 2 to 3 days, we scaled out at levels at 40 cents, at 45 cents, and then today we actually got 75 cents for part of it as well. So I'm bringing this up just for the fact is keep in mind when you do options, just make sure you risk. You only do the amount of options that you're willing to risk all the money. And so if you're gonna do a stock trade and risk, say, $500, then put $500 into the option, or even put $250 in the option if you want to play it a little bit more conservatively. But that type of trade, you'd be surprised at how much you can make playing these smaller price options. Now, the reason why I'm saying risk a smaller amount is because, yeah, it might not work. I mean, you can do some of these options and the timing might not be perfect. But I thought this was a good way to play this, especially because there was so much room up into resistance on the XLEs. So anyway, I hope this was helpful. Please hit the subscribe button and give me a thumbs up if you like this type of content, and we'll talk to you soon.